Well, hello everyone. It is Friday, June the 24th, 2022. I am Dale Delbridge, Benchmark Realty, Murfreesboro, Tennessee. This is your Friday Status Chat, and I have our numbers. We'll look at something interesting there. Did you notice I have paint on the fingers? All right, been working a little homework, because quite honestly, it's a different story for a slow news week. This week's been very busy, so we won't go into it, but I personally think it's a good time right now to take care of some of the home maintenance and some of the stuff around the house and some of the upgrades if you want to upgrade. I don't think it's a bad time. Is inflation high? Yes. Will tomorrow come? Yes. Will prices be higher or lower? My bet things will probably go up for a short run at least until we get a handle on inflation. And that's kind of what leads us into today's middle segment. People were asking me, I had somebody ask me just a few days ago, well, what does this inverted yield curve? It doesn't really mean anything. And I see some fair weather people in the industry going, we're never going to have 2008 ever again. That's probably fair because there's only one 2008. We've already had it. Recessions come for different reasons. And so really, if you're going back and listening to somebody explaining to you why we're not going to have one today because we had one yesterday and yesterday's was because whatever, okay, that the further away we get from yesterday, the less that matters because we're in a new world every day, and like a batter playing baseball and a pitcher, we don't know what's coming. We're going to try to play the game. And what was just pitched is no indication what's going to be pitched again. It's a new world. We got new circumstances. And you also don't want to hang around too many people who preach gloom and doom. The world's coming to an end. I'm going to make money on somebody else's misfortune. I have told people, and I use this several times, I said, well, right now we may be number one in the United States as a destination, depending on what metric you look at. Okay? We'll probably be three or so, if not number one. I don't think we'll fall out of the top 10. As long as we have people discovering Tennessee and coming in here, our demand is going to be high. And that's going to keep prices high. The thing that's going to, if it has a negative effect on pricing that kind of trims that off, will be the inflation cutting into the buying power. It'll be simply having difficulty finding people who can qualify to buy a home. But again, as long as people are pouring into Tennessee with cash, we're going to see low days on market. Let's look at these two screens real quick. This one I pull from calldeltosell.com. That's my website. You'll see there's two L's in call and one L in Dell. And you see this tab up here says MLS at a glance. That's the whole Middle Tennessee MSA. And look at days on market. That's still in single digits, like 3 or 4. Okay, if it's not big enough for you, let's look at another page because I want to showboat another tab up here called Live Data. I have some number of counties, neighboring counties, 3-2, that's 3 bedroom, 2 bath, just to see what they're doing, tracking. This updates every month. You can look at it. What is this one's days on market? Still 3 and 4. Okay, so we might see some people reducing some prices. That's not based upon demand. That's based upon people's ability to pay with this high inflation and rates going up. So you have some information that's available. Remember, there is a mortgage calculator on the front page, main page. You can slide down to the bottom and do some what ifs with the interest rates to see about what you think you might be able to afford to buy if you need to adjust things down so that we can target you more accurately. Let's do that. And you can do that yourself. You don't need me to walk you through it. But go to the web page, calldeltosell.com. Now, what do you say we get into that middle segment? Welcome to the middle segment. As with every middle segment, if I bring you something from the internet, I'll put the full link to whatever it is I use in the status chat's description over on the YouTube page. I also want to remind you that if you go to calldeltosell.com, one L in Dell and the word to sell.com, you can find a link to the YouTube site. I think we called it on YouTube. So just go in there and you open that page and there'll be a number of QRs. There'll be one that says status chat. You can click on that. It should bring up the latest one there. Now, today I want to talk a little bit, just very briefly, about the recent shocks in mortgage rates and things. We addressed it a little bit last time, but the question came up about the inverted yield. Let's get over here to what this thing all means about the inverted yield curve. Now, I have 2 articles. They happen to be both by Yahoo. And I'm going to use this. This is from Reuters, but it's on Yahoo page. Karen Britell June 13th, 2022. Now, I'm not going to read all this, but it's a pretty good article if you want to dive into what the curve inversion means and why it's a little bit scary for a lot of people. And you see these interest rates here that they're talking about, and they give you a little bit of history. Here are our yield rates. People freaked out just a little bit with the uncertainty of inflation and the Fed raising another quarter percent or 25 basis point. They started with 25, went to 50. They thought maybe it'd be another 50 if it's not under control, but they surprised everybody, went to a full 0.75%. That actually scared people, and that caused a little hiccup in the market. And along with people so much smarter than me who follow this purely on the financial side, we had a day when we had no one buying mortgage-backed securities because the level of uncertainty with inflation, that kind of scared them a little bit. What do we do with this funding? Why do we want to put money in something that inflation continues to, interest go higher? I'll lose money on it. So they kind of froze just a little bit, a little paralysis by analysis, and they kind of just hung out right there for that period of time, and we saw a little bit of a blip. Well, here we have another one from Yahoo. Is how accurate is the inverted yield curve at determining recession likelihood? This is by Vance Carriaga. I hope I said that right. Just 2 days ago, I guess it was June 22, 2022. And the bottom line is it's actually fairly accurate. It's just they're going to go into a little bit of whittling down in this article and say, we had the curve flip earlier this year, around May, I think it was, but it didn't stay flipped for very long. And so we were just ready for something jittery to happen, and it flipped back in the right direction. When the 10-year and 2-year flip, it means people are paying better on the 2-year yield than on the long term. It's simply because people are scared of the long-term ramifications of buying into something that's going to tie up their money for a long period of time. That's kind of pretty well much what the yield curve flipping means. Now, this story, and I'll put it back toward the top, they tell you that the longer it stays inverted, the stronger it is as an indicator. We all learn what happens tomorrow by living tomorrow. Now, I'm sure you had a meal or a snack or something today, unless you're fasting. And because you ate yesterday and prices of food are rising, doesn't mean you're not going to have a dinner tonight or something tomorrow. We have to continue on. We have to soldier on. So what we have is a strength and weakness and an opportunity and threats. And what our job is, no matter what's coming at us, no matter, we're like a baseball player. We don't get to choose what's being pitched at us. We just have to have our time in the batter box so that we're deliberately trying to hit what's pitched as our best guess. And that's all we can do. Hello, I'm Dale Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel. Call Dale to sell. That's 1 L in Dale, no spaces. Watch the demo on Real Scout and then call me and we'll set up your exclusive ad-free account today. Well, that took longer than I expected, even though I didn't read very much of it. The bottom line is when there's uncertainty in the market, some people will freeze. And with the inflation causing so much uncertainty, there was a day people didn't buy their mortgage-backed security, and that freaked the market out a little bit too. We kind of resumed business, and we're going back at it. Rates have come down. We're still under the threat of inflation, and it's going to have, I think, a cooling effect on the economy. I tell people this. I say a recession is a cure for printing too much money, for blowing up the money supply. It happened with Carter. You can go back to Carter and Reagan, and we had to go into a recession to correct it. And a recession is to an economy what chemotherapy is to a cancer patient. Unfortunately, you sometimes have to make the patient very, very sick in order to make the patient better. And we may have a recession coming. I don't say it's unavoidable. However, you do have opportunities within that time frame to maximize your gain or to minimize your loss. That's why we look at things very pragmatically. We look at how they are, not how we wish them to be or how we fear them to be. They are what they are, and we all have our challenges. So let's get to those numbers. Last week, 6/17/22, we had 11,996 opportunities in the Real Scout system. That increased over the previous period, and we have in those opportunities the coming soons as well as those who are ready to view. Now we had 4281 in the under contracts, still showing that actually dropped over the previous period for a ratio between the two of those at 36%. It also fell. Now this week we have 12,895 opportunities. That went up over the previous period. We had 4259 in the under contract still showing. That dropped over the previous period. And the ratio between those two numbers dropped 3 integer points. So it went down to 33%. Now that's a pretty good jump there. Now what we're seeing is inventory increasing. We are seeing some revisions in the heyday price in real estate that we have. But as long as people are moving in here, and as long as we have low days on markets, demand is not the problem. The issue will be, how does a higher interest rate cut into our buying power? And since it changes regularly, we're going to have to keep an eye on that. So I think things are still good. We could be better, but we are a whole lot better than a lot of the country if we remain in that top 10, if not number 1 destination for people to come, because people are discovering Tennessee. Now, we appreciate you watching. I'm sorry I went a little bit long today. I intend to cut it short, but sometimes you just have to show people that there's so much emotion in these transactions. You have to look at some numbers, and you can't be a pessimist, and you can't hide your head in the sand. Things are what they are. Let's maximize today's situation for you. Appreciate you watching. Remember, that website called DaleToSell.com.